We like to describe this as helping to navigate how the climate transition will impact financial markets. And I think if I went back 2 years ago, we used to say it's definitely not priced in. It's just not priced in. We're seeing more and more pricing in different sectors. We still think it's fairly inconsistent, and we still think financial markets are going to be adjusting in all sorts of different ways. We do 2 scenarios, a new one's coming. So we do what we call our forecast policy scenario I described, and that doesn't take into account, that's just a forecast. But in November, we're going to be issuing, and we'll issue the highlights of the policies, what we call a required policy scenario for those that want to get to 1.5C, the famous 1.5C, net zero 2050, which I'm quite sure many on the call will be saying, oh, my institution wants to align or is thinking about net zero. So we're saying, okay, we're finding it hard to forecast that at the moment. But what we can do is to tell you what policymakers would have to do over and above our forecasts to get you there. And it is it will be reasonably dramatic. And also we limit what are called the negative emissions technologies like carbon capture and storage, some aspects of bioenergy, CCS, these things that are controversial. For this very purist approach, we sort of limit those. And what we do with both of these, we produce what we do, a set of value drivers that institutions can use. And very few scenarios put out these value drivers. In fact, I think there's virtually none. So we specialize in working with the investment community, and it's all public. All of this is on the PRI. It's sponsored by the UN PRI, I should have said that. And it's all on their website, and it'll all be on their website if you go and look for it, and it's all public because it's actually funded by not-for-profits. So we think we're starting to get some traction, in the utilities world, carbon pricing, we're very strong on that, ESG generally, so basically we're getting into the guts of the ESG world. So why is this policy momentum, sort of inevitable? I did mention, in a sense, extreme weather. Ultimately, what you call extreme weather, if you leave it long enough and the science is right, you just don't want to see what you're going to get. The question is, how much sooner is that coming than they all thought? And of course, we've seen a great deal of this in the last 24 months, and it's being ascribed more and more to climate change. Security, refugees, migrants, this is something that weighs on people. An uninsurable world. I mean, insurance companies are now they model this, they're really worried about climate and the impact on how it affects them. Then we've got, civil society, which is always pushing very hard, very important. We've got financial regulators who are saying, there's Mr. Carney, saying, you've got to pay more attention to this. People have got to look at it. You've got investor action, engagement, the Climate Action 100, which is basically saying to corporations, come on, we expect you to get on with this, and we're engaging you. And I'd say I've sort of left to the end, in a sense, cheaper renewable energy and cheaper, that's key. In other words, one of the drivers is that policymakers no longer have to impose costs on economies. In many senses, they're going to impose benefits on economies. So I think all of those add up to a very strong reason why this thing is unstoppable. So what timeframes? Well, we have focused on the 2025 Paris Agreement ratchet. So every 5 years, the Paris Agreement asked for these NDCs to be submitted. And we're in one now. It was meant to be 2020. We're in the COVID 2021 version. We didn't think that would be the super breakthrough. So we're not surprised that we're heading into this one with some progress, but plenty to do. There's a so-called global stock take in 2023 where they look at how bad everything is. And then in 2025, we have a ratchet. You can then keep going 5 years at a go, but our focus is very much on between now and 2025. So how's it been going? Well, we are seeing renewable cost deflation. We've seen the EU leading in terms of its policy development. Leading investors are very active. There is increased regulatory pressure. Corporate strategy itself is shifting. The corporates are on the move on their own, as we know, through their net zero commitments. The US election outcome was very critical because that was a massive shift, and the Biden administration is doing a lot, and there's some key dates coming up. But nevertheless, it's been very important. We've seen much more net zero ambition, and we've seen more emergence of land use, which we think. So we think, our thesis is sort of being validated, still got plenty to go. So what do we think is going to happen? We have 8 policy levers. Carbon pricing is still very important to us, and we see it spreading out of the EU. And we see these carbon border adjustments, CBAMs. We called for those 2 years ago. People thought we were a little crazy. Now we see the EU has already introduced a CBAM and is working through with everyone the details of that. We think these are going to be very, very important, forcing carbon markets through the world. We see coal phase outs inevitable again. It's just a question of when. We see 100% clean power having to be targeted. With the United States is probably going to lead on, EU's leading, and then the US is trying to get it through at the moment. We see electric vehicles, the banning of internal combustion engine, that has been happening, and we see more action there. A lot on low carbon buildings, crucial. Industry is one of the hard to abate sectors, and we think we'll see a lot more action there. Moving on into agriculture, we're going to have to see more effort to cut emissions in agriculture, and a key one, forestry. We have to end deforestation, and we have to reforest. And those are key things for us. So I'm just going to finish up here with what we call our top 10 forecasts, which are still live. And carbon border adjustments are indeed part of those. And we think the United States will probably move towards a carbon market. We like to think after the midterm elections, that may be a bit optimistic, but certainly by 2025. And we think the EU's, the EU carbon price is serious now, and that's having a repercussion. And then on coal, we do think that India is going to be coming much faster. I see one of our coal agriculture land use has got, it should be coal here. So we think India is moving more away from coal. We think China will end the construction of new coal-fired stations after 2025 and will put in the right policies to get themselves towards the net zero, which means a lot of reduction in unabated coal in their coal fleet, which is 12% of world emissions. The Chinese coal fleet is bigger than the US economy in terms of emissions. So it's very crucial that's solved. And think the United States, coal is already way on the way out. Here we get on clean power again. We're looking for this 100% clean power for 2040. That's in a bill in the Congress right now. So, it's going to, hopefully that gets through even before the COP. Zero emission vehicles, yes, we see those spreading more and more. Industry, we think all major industrial economies will require all new industrial plants led by steel and cement to be low carbon by 2040. That's a big policy call. And then in agriculture, again, comprehensive mitigation policy in the OECD type, and then more and more coming later into other countries. And for land use, this is perhaps our biggest call, that we'll see tropical forest deforestation end by 2030. For a lot of people, they go, gosh, that's late. For us, that's a big call to get it done by then. So then we think that will then knock on. So those are our big forecasts. What would you do about that? It's fairly straightforward. You reallocate and you recycle your capital. So we're going to see both in the equities, fixed income markets, we're going to see a move away from the high carbon assets, more towards the green assets. And we're very big on real asset, private markets, infrastructure, real estate, and private equity. And we think infrastructure in particular is the heart of this transformation. And we see a lot of investor money, like helping corporates to use it from their balance sheets and putting money across there too. One thing I'd end on is for asset managers, we think that, asset managers have got to take this on. They've got to create product. They've got to be help drive company transitions. They've got to be involved in voting. They've got to talk to clients about the mandates they're giving them and how they're offering them new product. They've got to build the new product. They've got to work with things like IPR. We believe in valuation. They've got to collaborate and engage with regulators. So for us, it's a very, very active space. So I'll finish there, disclaimer, which probably could go on for pages, but doesn't. And that's the overview.
Thank you. That was fantastic, Mark. I was just going to ask, in terms of your top 10 forecasts, I can see obviously the logic of all of those, but politics doesn't always operate logically. And I wondered to what extent you think that, what kind of probabilities you might assign to some of those, because you talk about sort of embedding the forecasts into valuation, which is, I think, what our members and investment professionals more broadly would like to be able to do, but it can be quite difficult, both in terms of sort of assessing the timing, but also actually the degree to which companies' sort of political infrastructure, as well as the economic infrastructure, feels able to embrace some of these changes. And thinking most obviously about things like sort of carbon pricing in the US, and whether that's politically feasible at the moment.
Right. So on the PRI website is a very large document that goes into massive detail on our forecast update, which we published in March this year. That was based, apart from our own analysis, which is based on trends, based on talking to people. It's not obviously just doesn't come out of thin air. We surveyed 200 policy experts, including some policymaker types, and across the board. And there's a whole set of tables which gives you their reactions at that level of detail. And what it made us do is, you're seeing the net result. So before, we had some were more ambitious. We pulled them back a bit. We had some that were less ambitious, and they told us to pull them forward a bit. So it's not just, it's meant to be built out of a type of political market consensus to some extent. Now, that doesn't mean we haven't gone out on a limb here and there. I would say our US carbon market is probably one of our more ambitious ones, which those of us within the forecasting group, and in particular, I think I see that as quite possible. But a lot may depend on the midterms and how that all goes. And of course, the 2024 election itself, right? So obviously people might say, I'm not going to bet on a US carbon market immediately. That's fair enough. But you're going to be able to monitor it, I think, and there are going to be some key signposts. Does it drive a lot of the results in the model? Not in some, particularly in land use, because you need carbon markets to pay for the land use stuff. That's really very important. It's not really going to affect the clean power bill is way more important for the power sector than the carbon price in reality. So carbon markets, and this is true of the voluntary carbon markets, which are starting up in earnest again. Carbon markets are very important for nature-based solutions and negative emissions technologies, and fossil fuel companies saying, I'm going to build a forest here. And so basically the carbon markets have a lot of applications, but very important how they support land use changes. So I would say that if you're less inclined there, you might be a little bit more skeptical about some of the land use conclusions. Yeah. If I look through the others, I think that, we're seeing the acceleration of the retirement of the internal combustion engine. So I think transport's I don't know if many people are arguing with us on that. Industry, but people, I think most people say, they're going to have to act on it. So if you listen to governments, they're going, we're going to have to act on industry. I mean, it's not like this is some sort of fantasy, right? So I think, and I look at now, when it comes to China, we're making some very big calls there. And who knows? I mean, honestly, those are best assessments which relate to their net zero 2060 assumption, which they have made. So we try and work back and we try and be reasonable about that. But when you look at what's going to be required from China to hit 1.5 and quick, then you might think, oh, I don't think they've said that. That's your call, right? All we can do is lay that out for you. We do not have China hitting net zero in 2050. We've taken them at their word and we've worked back from that. So I look at it and I think, look, I don't think most of what we've got is pretty. So, yeah, you've picked perhaps the one thing that's a little bit more controversial that we're saying. But I must say, as a head of research of an investment bank's research department, if you weren't saying something controversial, the in-house joke was you weren't adding any value.
Yeah, indeed. You talk also about cyber signposts, and I was just wondering what you thought we should be looking for from sort of COP26, or give us an idea of whether.
Well, funnily enough, I think the next few weeks, even pre-COP, is going to be like we may see. Well, first of all, we've got the budget reconciliation bill with clean power in it in the United States. And that's going to be, heavily in play in the next few weeks. China itself may update pre-COP some of its 2030 targets. And it may say some very direct things about 1.5. They've already been saying that. Didn't Paris say below 2 degrees? I don't remember them saying 1.5, as the Chinese point out. So we may see some more dialogue around that. I think the COP itself will attempt to do more on coal. They're working, Kerry and Sharma are working very, very hard. There's a lot of diplomacy going on. India and China for financing coal. So I think we'll see a lot of that. I think we'll see deep carbon. We'll see a lot about industry and decarbonization sectoral plans and groups. And I think we'll see talk about land. I do think they're going to try and make deforestation and forestry something. So do I think that at the end of COP26 that we have closed what they call the emissions gap? No, nobody does. So one of the things is that's why we've always thought there were, this is a process. It's not a failure. The COP doesn't fail. The COP takes a step forward. And this COP has already, helped people take a step forward. Some of the NDCs could have been stronger. They may still get strengthened a bit. But I think the dialogue is going, and you hand the baton on in what we consider to be the inevitable policy framework. It's just going to have to do more.
Mark, thank you so much. That's terrific.